Let's get some thoughts with Tom Hulick, who's the CEO of Strategy Asset Managers. Tom, we are picking up on the back of a real red ink day stateside as the bears circled. What do you make of the violent selling action, particularly around technology names stateside?
Well, thanks for having me. And there's so much volatility going on in the markets right now, especially because of the tariff talks. But what we're really excited about is the kind of the long-term outlook that a lot of people aren't talking about right now. There are lots of things that we're going to focus on, such as deregulation, pro-growth policies. And when you have M&A activity picking up out there, we see something a little bit on the horizon that's a little bit more positive for everybody.
What about a recession, Tom? A big fear yesterday was that, look, given the investment decisions now being put on hold, CapEx too, thanks to uncertainty around tariffs, we could be talking about a recession if this goes on much longer. Probability of that went up in a number of the big investment houses. Do you think that is something that investors need to keep on their investment horizon?
You know, the probability of a recession is definitely a lot higher right now. But if you look at all of the structure around the markets right now, it's very, very healthy for us to have a sell-off. We haven't seen a 10% correction since about 2022. We're starting to experience that right now. Even if we go beyond 10% and we do go into a recession, I think it's going to be very, very short-lived, and we're going to experience a much stronger market in the second half of the year.
So what would you be doing right now from an investment perspective? Is it time to step in and buy the dip, or would you wait, given that you say we could see another leg lower?
Well, it's a good question. You know, as an active manager, stock selection matters. And we talk to our clients on a daily basis about this. On our research call this morning, we talked about the technical aspect of the market and the correction that we're nearing. But the focus and what the theme that we're looking at, and we talk to our clients about this, is we're reassuring them that the fundamentals still remain strong.
You've got Dick's Sporting Goods on your radar as one of your favorite holdings, and I find it interesting given the concern out there around the U.S. consumer and a lot of the soft metrics suggesting that the U.S. consumer is in worse shape than initially anticipated. We've seen consumer discretionary start to underperform consumer staples. What makes you so bullish on this company?
Well, you know, the consumer may pull back a little bit and recalibrate, but if you've been in the U.S. and you've gone into a Dick's Sporting Goods, they've really kind of cornered the market as a one-stop sporting goods store. Their earnings reports are going to come out today. We think it's going to be another positive day for them. They've got a strong product assortment, and I think that they're going to do just fine. I mean, financially, the company has surpassed the earnings per share revenue estimates in the past, and I think that over the past 5 quarters, I think they're going to do that in this earnings announcement.
Tom, Broadcom, another stock you're looking at, but it's in some bad company. If you look at some of the ETFs in the semiconductor, Philadelphia semiconductor sector now 4405, well and truly off its highs. How can Broadcom lean against some of this negativity that is now sweeping up some of the U.S. chips?
Well, it's one of our largest holdings in the multiple portfolios that we manage for our private clients, and they're continuing to see red hot demand for the custom artificial intelligence chips from the companies looking for an alternative to the costly processors of a market leader, and like NVIDIA. We own NVIDIA, we like NVIDIA, but Broadcom is working on the hardware side of things, and their earnings report was very, very solid. We think that there's going to be an expansion of that going forward, and we're very optimistic about Broadcom, especially in the AI sector.
Tom, we'll come back to that in just a second. We've got some breaking news at this hour, and this is around Nissan Motor. It's named the Chief Planning Officer, Ivan Espinosa, as its next CEO. The news that Uchida will step down. This is effective on the 1st of April. So big change at the helm here for a company that did try a tie-up with its rival Honda, but that led to no outcome. So a change in terms of direction for that company. Tom, I want to come back to you on the AI story, because having just been at a big technology event, I can see that there's huge ammunition from companies being thrown at the AI story, that is still at this stage intact. What do you make of, though, when it comes to the reset around big stocks that had momentum from Microsoft to NVIDIA? Is this a buying opportunity?
We think so. We actually discussed that on our call this morning as well. Some of the stocks that we own, including some of the Mag 7s, but Broadcom in particular, although they may have a temporary pullback, we're still thinking that the active stock selection in this specific technology sector is one that you're going to have to pick and choose the time to enter in. And we're very, very close to that with some of the stocks that we own.
Tom, let me step in and ask about what's happening in the airline space. I'm not sure how closely you follow this sector, but we're seeing some heavy selling in European airlines this morning, and it seems linked to Delta yesterday coming out and cutting their profit forecast. Any view on what's going on there?
You know, we don't hold Delta or any airline stock in our portfolio, and I did see the Delta earnings were a concern for those who hold Delta. But you know, the travel industry, myself, I included, I think will probably experience a short-term pause. But a reset and kind of a recalibration as we see it. But I think the summer months are going to be strong again. People will be traveling, and maybe Delta will have a better earnings report in the future. But we don't hold Delta at this time.
Well, Tom, I think I would categorize you as a market bull at this stage, especially given how much negativity there is out there right now. What is the best way to hedge in case your bullish view doesn't materialize and things don't go quite as you expect?
Well, I thank you for that positive comment. I am more optimistic than pessimistic. I do think there's sector leadership out there that's kind of shifted. The market has broadened out quite a bit. Less focus on the Mag 7, and it's very healthy for that to happen. Maybe we're in a very defensive position right now. You could go into insurance companies that we like. You could focus on healthcare companies. Energy's been a sector that we feel that it's very much a positive sector for this year. But you know, overall, and we didn't even talk about financials, and financials have shown considerable strength over the past several months. But I'm going to throw my cards in and say that we're going to be very, very positive for the remainder of the year after the second quarter.
Let me come to you on banks because we have seen a sell-off not dissimilar to what you've seen on FANG stocks. Yesterday, the SPDR S&P Bank ETF, the KBE, fell 3.8%. The FANG stocks were down 4%. So similar ranges by and large. And Goldman Sachs, one of the big stocks to the downside yesterday for the Dow. Is this a market saying we're concerned now that some of the promised M&A is not going to happen? We've recalibrated on the potential for more Fed rate cuts if we're talking about a recession. Some of this prospect not good for the banks.
Well, it's interesting that you bring it up. One of the key points for our market outlook will be what is actually happening in the M&A market and maybe the mid-cap sectors, for example. The fundamentals still look pretty strong. There could be a recalibration on what you're going to pay for a particular company, but there is a lot of activity out there, and the focus should be that if there is activity, that means that some of the smart money is going for deals. A
couple other stocks, Tesla down about 50% since December levels. Apple's also being hurt as well. Both of these stocks, very individual news flow here. Tesla, of course, I mean, you can throw everything at it from how Elon Musk is disrupting the stock to, well, the sector disruption itself. And of course, some of that came through from Volkswagen today. And Apple really kicking into the long grass some of its AI ambitions. How do you think about a couple of these big names?
Well, Tesla, for example, Apple, for example, all included in the Mag 7. Major focus on these companies and what's in store for the future. As you know, Elon Musk is very busy right now, and maybe he's taken his eye off the management of Tesla. But in the long term, I think that the stock remains something that you would want to participate in. As for the other Mag 7 stocks, we are invested in most all of them. We think that down the road, you're going to want to hold them in your portfolio. We may not be adding to them right now, but I would not bet against technology and the growth of the potential that's in the future.
That's a good line for us, Tom. Thank you very much. Tom Hulick with us, the CEO of Strategy Asset Managers.